We did it.
Yay! So welcome everybody. We are going to talk today about mortgages and what is happening in the real estate industry on the mortgage side of things. Um, Jeff, if you want to tell everybody a little bit about yourself, and then we'll dive into some of the dirt that a lot of people are wanting to know about.
Sure. Thanks, Michelle. So my name is Jeff Mudrick. I'm a mortgage agent in Ontario. And the great thing about being a mortgage agent is that we can service like all of Ontario, which is fantastic. So I've worked with Michelle for a little while now, and she's obviously a fantastic realtor, great at what she does, the team that she has around her. And when she asked me to be a part of this, I figured there was no better way to no better person I'd rather chat with than her about all things mortgages, real estate, and happy to answer any questions people have.
Yeah. So, um, Jeff, I know there's been obviously a lot going on in the real estate industry. We've all sort of seen this huge paradigm shift happening with interest rates and home price values and all that stuff. So, I guess let's talk about, I guess maybe interest rates first, because I know a lot of people are starting to have little panic attacks over this.
Oh yeah, my phone has been ringing off the hook, and just questions. People just I feel like information is power. So yes, interest rates are going up, or they have gone up over the past 6 months. They were at historic lows for years. So the expectation was that yes, of course they would go up, but nobody had the crystal ball as to how much they would go up, how quickly they would go up, which is definitely causing a lot of this panic, anxiety, the fear that we're seeing. So when I send my calendar link out to my list of clients, and that thing books up pretty quickly. So 6 months ago or 7 months ago, we were looking at, as I mentioned, the historic low fixed and variable interest rates. And over the course of those same 6 or 7 months, those rates have continued to climb, up to a point now where a lot of people are at the point where they're deciding is now a good time to purchase? Do I maybe hold on to my money and wait? We're seeing housing prices comes down, so what does that mean? And I'm sure you've gotten a lot of the very similar questions. Is it
Yeah.
great time to buy now, or do I hold off for another couple months and wait to see what happens?
Yeah, I know I get that question a lot, and I've been on a lot of appointments recently, and a lot of people have their mindset in the realm of February, March era, and it's a totally different world now from then till now. And so people, have to understand that with this shift, home values are changing and buying power is changing too, right? So what does this mean for new buyers? Like, what does this interest rate do in terms of their buying power or affordability?
Yeah, that's such a great question. So two different answers there. So I'll start with buying power, and then I'll talk about affordability.
Okay.
So everyone's buying power on July 13th, when interest rates skyrocketed up, everybody's buying power decreased by about 10%. And that's because the way we as mortgage brokers, as mortgage agents, as your mortgage specialists at banks have to qualify all clients is this new stress test that came out. So I won't dive in too much to it, but essentially the interest rate skyrocketed to a point where everyone's affordability decreased, which, as a buyer, yes, you might be a little disheartened, but at the same time, if everyone's buying power decreases, then the hope or the idea is that maybe home prices will follow, or they have to decrease as well.
Right.
So that's one, is the qualifying amount, your buying power is decreased. As for affordability, so I talk to every client, or when I talk to every client, I say the same thing. There's two numbers I want to talk to you about. One is what a bank or a lender will tell you that you're approved for, and the second is what you actually feel comfortable spending on a monthly basis. Because sometimes those can be the same, and sometimes those can be two completely different things.
Right.
So even if somebody's buying power decreased by 10%, maybe it doesn't affect them because they weren't looking to buy at the top end of their budget, which is great.
Right.
But the way the affordability works is, everyone's monthly payments is going to increase by whether you choose a fixed or variable rate. It's gonna increase by a significant portion, a significant amount, depending on your your mortgage size, purchase price, all that.
Right, right. So with current homeowners, what does that mean for them? So specifically, I know a lot of people are starting to ask me questions, and I always revert them to the professionals because I'm like, I don't know the
Me
answer.
too. I do the same thing. Yeah.
But in regards to like, okay, so my mortgage is coming up for renewal in a month or two. What happens now? What does
Yeah.
this
So great point. So I might go on a little bit of a whirlwind answer here, but for anyone whose renewal is coming up, typically what that means is that they signed most mortgages are around 5-year terms. So anyone who got their mortgage 5 years ago was in 2017. Interest rates were, they were a little bit lower than they are now, but not too far off, right? So I've had a lot of those questions as well where, hey, what happens with my renewal? The answer is, yeah, you're going to pay a little bit more than what you're paying right now, but it's not going to be as much of a gap that we've seen from people who bought in January, November, December, January versus today.
Mm-hmm.
So typically, like the average 5-year, I'm a numbers nerd, so I like to follow the stats. Like a 5-year fixed rate back in 2017 was somewhere around like 3.5% to 4%. And today, if you're going to renew, you're going to renew at, maybe it depends on obviously a lot of factors, but somewhere between 4.5% and 5-ish%. So you're going to see a bit of an increase, but not as much as you might expect. So for every $100,000, your mortgage is probably going to increase by around $12 a month. And that's a very quick, easy math
Right.
to figure that out.
Right. So when I go to renew in 2025 from 1.84,
that's probably going to hurt a little bit more. Yeah. The other thing to note too, though, is that we've seen I think most of the quote unquote panic happened in June and July. June and the first half of July. And what we've seen after that first half of July until today is fixed rates are actually coming down. They're kind of resettling, which is very exciting for a lot of buyers and very exciting for a lot of homeowners who were on it, who had a variable rate, and maybe they didn't like that their payment was changing on a monthly basis. So, maybe now there is an opportunity to lock in a fixed. Personally, if it's me, I'm hanging out with a variable rate all day. Riding the wave, if you will, but obviously happy to have conversations with people about the pros and cons of that.
Yeah. So, if you can do it in a quick version, what is the difference between? Because I know a lot of people don't understand the difference between a fixed and a variable rate.
Yeah, definitely. A lot of misunderstanding, or just it all comes back to knowledge and education and this is my job to know this information. It's not the average homeowner's job to know this. So
for mine, because I don't have time to understand everything about it, but I do need to know still.
Yeah. So with us, I'll talk about the pros and cons of each. So fixed rate, essentially what that means is your monthly payment's going to be X amount of dollars every month for the next 5 years. And this percent is going towards your principal, and this percent is going towards the interest portion of your mortgage. Very standard. Probably was the most popular. It was I think there was something like 85% of Canadians chose a fixed rate mortgage pre-pandemic because they want that security. They want to know exactly what their monthly payment is going to be, which makes sense. The con of a fixed rate mortgage, or the not so beneficial things, is that you can't take advantage of times when interest rates do go really low, like we had for the past. It's really been 4 years of very low rates, but. So you can't take advantage of that. There's no extra savings there. The other big negative to a fixed rate mortgage, the biggest thing in my opinion, is the penalty associated with breaking that mortgage. So the penalty on average to break a fixed rate mortgage is somewhere between 3% and 4% of your total mortgage balance. So if you have a $500,000 mortgage, it's likely going to, if you need to break the terms of your mortgage. So if you want to refinance early, if you want to sell the house and you don't want to bring your mortgage with you, if there's a whole host of different factors, and a $500,000 mortgage, the minimum penalty is probably going to be somewhere between $15,000 and $20,000. So that's a big negative. Yeah. That's the fixed side. Let's jump a bit to the variable. So variable, the biggest pro of a variable rate mortgage is the flexibility associated with it. So to kind of counter the fixed rate, variable rate mortgages have the lowest penalty in Canada. penalty to break your mortgage is always going to be 3 months of interest, whatever it is at that time. Typically, it equates to around 1% of your mortgage balance. So that same $500,000 mortgage, instead of paying $15,000 or $20,000 in penalty, you might pay $5,000 as a penalty to break the mortgage. It's a huge savings there. The other benefit, I know I'm going on a long rant. I'm sorry.
That's okay. We're educating people, and I think that's really what we're trying to get at.
That's the goal. Yeah. So the other benefit of a variable rate mortgage, as I mentioned, is flexibility, lowest penalty in Canada, and you can ride the wave. If you have the monthly budget, you can, increase your monthly. So here's my advice. If you want to take advantage of let me pause. The best part about a variable rate mortgage for the past few years has been the fact that it's been a lot cheaper than fixed rates. So you're saving at least like a full % on your mortgage by choosing a variable rate since COVID started, for the past couple of years. So the cons of a variable rate mortgage is that if you have a strict budget and you can't go over X amount a month, variable rate mortgage might not be right for you, because you have to be kind of willing to ride the wave. For 4 years in a row, we did not see an increase in rates, which is why for the past 6 months, we've seen 4 of them. But again, there are ways to counteract that. For example, there's something what's called like a static variable payment, which means that you have all the benefits of a fixed rate because your payment is static, meaning that even if interest rates go up, your actual monthly mortgage payment remains the exact same, which is huge. A ton of first-time home buyers that I've been working with have been taking advantage of this product. Because they like the idea of the fixed rate, but they get all the benefits of the variable rate as well.
Yeah, that does
take a
sound
breath.
Woo! Okay, so basically then, for everybody that is in a home buying process right now or future home buying process, anybody that was pre-approved, say a month or 2 ago, certainly needs to be reapproved.
Yeah, 100%. So even if you were approved and you have a letter in hand with a variable rate, you need to get pre-approved again, because when you go to buy your property, when Michelle's showing you a property, the affordability is going to be a lot lower, even though you have that pre-approval letter. Every lender has sent an email out to all their mortgage brokers to say, hey, everyone needs to get pre-approved again, because the interest rate has gone over the threshold for the stress test, and now we have to qualify a little bit differently. So yes, Michelle, you are correct. Don't waste clients. Don't waste your time. Because that does need to happen.
Right. Now, I just had a good question, and now I'm forgetting it. Oh, geez.
I'll ask you a question if you don't mind. I would love to know, with you, what have you been seeing? Have you been seeing a lot of hesitancy, or have you been seeing clients kind of take advantage of these lower home prices?
I think so. Okay, let me start again. I've had buyers that have been looking for houses for years, literally years, that have been able to secure homes recently, which is like super hurrah, super happy for them. It's kind of a breath of fresh air, in the sense of like, okay, so we weren't in competition with 36 other people. Like, this is awesome. And so the competition aspect of things is, I'm loving the fact of it. I mean, I'm a more so a listing agent than I am a buyer agent now, but when it comes to the buying side of things, you want to see your buyers get the best deal, right? And you want to see them not have to compete and go in unconditionally, and give them an opportunity to do their due diligence and do that home inspection and that kind of thing. So I'm happy to be seeing these things come back, because there's been a lot of, in the last couple of years, there's been a lot of homes purchased and then the after the facts findings, right, that are not so, maybe people aren't so happy about. And fortunately, you have no choice, right? Like, you really didn't have a choice. And so, I mean, we even purchased the house that we're in now in December of 2020, and there was 13 offers. Right. So, and we had to go in unconditionally. We actually came and viewed the house twice. And one of them was with a home inspector because I was like,
Right.
okay, so how do we improvise here? Because there's no way that we'll get this deal together if we've got a bunch of conditions. We even had a house to sell. So we had to go in completely unconditional.
It's you know what, like I've had a lot of conversations with clients just about how beneficial this is. I've had a conversation with yourself, with realtors as well, just saying this is the way the market should be, where you should be able to, there shouldn't be 90 offers on a home or 32 offers on a home where you have, the conditions were not a thing for a couple of years. If you had and you can speak more to this, but tell me if I'm wrong, where if you had a condition, the offer kind of gets thrown out the window. Agents and clients are not, sellers are not looking at that offer, where it's not, like you said, clients now can do the due diligence. Although we as mortgage brokers, we can underwrite the file 100% so that we know for a fact clients will get approved. But what we can't know is that the lender may love the client so much, but maybe they don't like the property. And that's why the home inspection report is so important, and why conditions as a whole are important to have.
For sure. Yeah. Like it's been great seeing that shift. I mean, from a seller's perspective, I mean, it's great when you have an array of offers to choose from. Of course, you're going to take one that likely has no conditions and you sign on the dotted line and we put that sold sign up and everybody's happy. But that's not really the reality, and that's not really a sustainable way to do real estate. So it had to shift in some way. So yeah, so even like home prices and everything are obviously shifting as well, but the demand isn't as high because now, there are more homes for sale than there are buyers. So
Which
now it's a buyer's market.
Yeah, exactly. Which was such a huge shift from the 6, 8, 10, 12, 24 months ago.
Yes.
It's been pretty amazing.
Yeah. So, I mean, obviously I feel fortunate to have been able to sell, several more houses than I expected to. I also am the realtor that has a heart and that cares about people. And another thing, or another, way of perspective to look at this is, if right now you're going to be doing a transition, a sale and a buy, you're buying and selling in the same market. So if you're buying low, you're going to hopefully, or sorry, if you're selling low, then you're hopefully going to be buying for lower too, right? So if someone sold in February and was waiting and now they're buying, they had a good strategy.
Yeah.
But yeah, so or the opposite, right? Where or maybe not the opposite, but if you bought in February and then you were waiting until now to sell, that's big, a big mind shift that you had to sort of get your head wrapped around. But real estate, honestly, it's like a gamble. Nobody ever knows. We will look back at the stats and go, oh, so that was the peak. We didn't even know we were in the peak when we were in the peak until we were at the peak.
Yeah, you know what? And it's interesting too. I've had a lot of clients reach out to say, hey, Jeff, like, do you think I overpaid for the property? People who bought in January and February. And I'd say my response is pretty much the same. It's that it doesn't matter as long as you're not selling today, it doesn't matter what the value of your property is today. If you're looking to sell in 5, 10, 15 years, if we're looking at historical trends, your property's value will continue to increase for the length of time that you live there. Yeah, every chart has these blips, right? So if we're in a blip, we're in a blip, but it is what it is. It's a blip, and
you just kind of have to ride the wave. And I mean, most people, when they're, purchasing real estate, I think they're purchasing it to gain equity, not necessarily just to buy and flip. Obviously, there are lots of people that do that. But if you're buying a family home, you're planning on being there for 5 years or whatever. I always ask my clients, like, okay, what's the game plan? What is your, like, are you here for 5 years, 10 years? Are you going out in a pine box? Like, what are we looking at here?
And that's why, like, I feel like the most important question I ask clients is, are you comfortable with this monthly payment?
Yes.
Or are you comfortable with this mortgage balance? Because it doesn't matter what you purchase at. You just have to, I've heard this a lot recently. Maybe you've heard it too. It's you marry the purchase price of your home and you date the interest rate.
Yeah.
It's going to go up and down. We're going to move and groove throughout the 25 or 30 year amortization. But you marry that purchase price. So as long as when you purchase, you're okay with that price at that time, and you can kind of don't look at listings today.
Yeah, exactly. And that's the thing, right? Like, I know people focus on, their home values and on a constant basis. If you're honestly not looking to sell anytime soon, don't stress yourself out. Like, just don't. Like, if you're interested in knowing what your neighbors are selling for and stuff, so be it. That's great, or whatever. But if you're truly not looking to sell anytime soon, don't stress yourself out, because it's too stressful. You're like,
Easier said than done.
I just bought this house for $1 million and now it's only worth $8 million. Well,
Yeah.
If you're not moving anytime soon, that's not really relevant.
Honestly, it's easier said than done. When my family moved up here, we were constantly looking at what the neighbors purchased at, and we were like, "Oh no, what did we do?" But it's a long, and then now I'm happy. It's a long-term game.
And that's the thing too, is what I'm finding is, I'm going on appointments for listings, and they say, well, Joe Smith across the road just sold, 2 months ago for $900,000. That was 2 months ago. Like, it's a totally different world now. So it's always really important to keep in mind, the last 30 days, really. And that's almost even too long, really.
And with projected increases probably again in September, which is likely what we're going to see, another increase rate on the variable side, another increase to the variable rate. The guess, or again, basing it off of the last little while, housing prices may come down a little bit more, again, just because the cost of owning that home is going to increase. So the fun fact I like to tell folks is that if you purchased $1 million home in January with a cheap interest rate, and you bought an $800,000 home today with a higher interest rate, your actual monthly expense is going to be relatively the exact same, essentially the exact same. But what you are saving on is that down payment, which is a lot of money. So, it's a great time, in my opinion, and yeah, I'm biased for sure, but it is a great time compared to the last couple of years to buy, because of what Michelle said, where there's not that 30 offers on the property. You can have your conditions, you can kind of purchase, have a condition, take a step back, relax, and then decide if that's right for you.
Right. And you may have already said this, I'm just wanting to reconfirm what you said. The fixed rate is around 4.5, 5. What's the variable rate at right now?
Variable rate it kind of depends, anywhere from like 3.8 to 4.5.
Okay.
Yeah, depending on a whole host of different factors. That's today, August 3rd. I don't want to get Facebook Live and I get quoted with all this. And tomorrow rates change.
Tomorrow everything could change. Same with the real estate industry. It's the same
exactly.
thing, right?
Yeah.
And one other thing maybe I'll see or two maybe things. Stress test, is that changing? Is that going away?
You know what? The stress test right now is not even a thing, which is because interest rates are so high. So like the original plan of the stress test was to qualify clients at 5.25% or your interest rate plus 2%.
Okay.
So because interest rates are so high, the 5.25% is in the garbage, because we don't use that anymore, which is why buying power is decreased. Okay. So now we have to qualify everyone at at their contract rate, so their interest rate plus 2%. So the guess in the industry, like the big question is this stress test going away, and can we start qualifying at the contract rate?
Right.
Which would increase everyone's buying power quite a bit.
Right.
So great question. I think, my guess is something is going to have to change, but we don't know when.
Yeah. So one other last final thing. I was at a conference not long ago, and they made mention of, and I don't have my notes in front of me, so I'm not even going to be probably accurate here. But is there something changing at the end of the year where you won't be able to take out so much equity out of your home?
Okay, so I think I know.
In terms, that is.
Yeah, so there's a lot of talk again around how to pull equity out, like HELOCs, essentially, home equity lines of credit, and what that money can be used for. So some lenders, it's all lender dependent, but some lenders will let you pull it up to 80% of your property's value. There is talk that you can pull out only up to 65% of your property's value. And the kicker is, for anyone who wants to purchase an investment property, there is talk about not allowing you to use your money from your home equity line of credit to purchase that investment property. So there are some changes that are being talked about, but again, it's all speculation right now. And until we see it on the news, until we see it on whatever radio or channel we watch for the news, I'm not too concerned about it.
Like, it would be an overnight decision, like, oh, hey, by the way, this is now. Or do they kind of give you, like, I know usually, is it usually the night before interest rates are going up, they let like professionals like yourself know?
Yeah, usually 24 to 48 hours we'll get a notice for fixed interest rates when they're going up, and then everyone
now, do they tell you the rate, or do they just tell you increase is coming?
No, they tell us the rate. Yeah.
Okay.
So like the great part about that is if I get an email saying, hey, fixed rates are going up by 0.5%, what I'll do is sometimes I contact the client, sometimes I don't, but I just throw their application in for a rate hold so that if they do purchase in the next 120 days, at least we have that lower interest rate locked in.
That's another good point, is locking in interest rates. So that's definitely something that you're able to do, obviously.
Yeah. It's I do it for clients whether they know it or not, just because if they're it helps them save. Them save $15 a month for the next 5 years. I think most clients will be okay with that.
Absolutely. Yeah. And how long does it hold over for?
It's for 120 days. And then if they do purchase in that 120 days, then they'll get the lower of the held rate or the current rate at the time. So it's a win-win.
Okay. Perfect.
Yeah.
Awesome. Well, I think we've covered a lot, and I'm hoping that anybody that has additional questions or comments reaches out to either of us. Maybe next time, Jeff, we'll put your cell phone number or whatever in that, but in the comments of the live, I will put in your information so people can reach out to you. And of course, everybody just needs to send me a message or whatever if they've got questions for me. But I appreciate your time and hopping on with me. And I think we're going to do this on a monthly basis to just keep everybody informed and educated on what's happening. And then once people realize that we're doing this on a regular basis, people can pop on and ask questions and we can address them right away.
I am looking forward to it. Yeah, like my goal for this as well is just to get, I'm sure we both get asked a bunch of different questions throughout the month. So I'm just going to bring a lot of those questions here, and we'll converse just similar to what you said, where you get asked a lot of questions that you send off to professionals. I get asked on a daily basis, what do you think this house is worth? And I'm like, no, talk to Michelle, please, because that is not my area of expertise.
Yeah, for sure. Well, like I said, I appreciate your time, and we'll see you next month.
Thank you so much, Michelle. Chat soon.
Thanks.